Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Good morning, everybody, and welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson, coming at you. It's bright and early where I am. I'm still traveling, which is why I've got the strange, I sound like I'm talking to you in a bottle sound, because I'm not in my normal microphone, but hopefully it sounds okay and you can hear me at home. We're going to do what we do each and every day, take a look at the same 10 to 12 futures markets, identifying turning points and potential breakout trades from an educational perspective. Tomorrow we will have a live trading room for Traders Army subscribers. If you'd like to see what a live trading room is all about, next week is our free preview week. So we're actually going to have 3 live trading rooms next week that you can join in. Go to TradersArmy.com, sign up for a free subscription, and you'll get the information on how you can join the live trading rooms. So let's dive right in. S&P. We're down 12 points today. Now, I will tell you, I was taken a little bit by surprise by the magnitude of yesterday's move. I was in a very much a hurry up and wait scenario yesterday, and if you recall, I didn't really add a whole lot of levels to the charts, and so yes, it was one of those days where I'll tell you, I missed out on most of yesterday's large move. There was later on in the day the ability to maybe take a breakout long above this region if you wanted to take the breakout long. I did not. It didn't change my rule set. It didn't follow what I had the way I want to look. And my 4-hour chart tells me that I should be a seller, and I'm not going to just go out and buy because we've got a lot of strength. I'm going to follow the overall set of rules, and so we're beginning a bit of a rollover. Now, we do have a higher swing high in the hourly chart and a higher swing low. So as a shorter term day trader, maybe you're using a 15-minute chart. If you're using 15-minute charts and 5-minute charts, there may be an opportunity to get long right in here. Down here where we had a very strong breakout yesterday, there's going to be an opportunity to possibly get long. We could even, really make this much wider. This is a very wide area because there's a lot of basing in here, this whole thing. So there's an opportunity to get long down here on the 15-minute chart for those of you that are interested in that. On the hourly chart, I think that we've got more rollover left in us. There's plenty of room for price to continue to kind of fall and roll over. Now, why did we stop going up at this region? Well, I'm interested in the fact that we actually made that reversal at about the European market open. The European market open is really what has started this little bit of a move down. This could just be a pullback after a pretty large move, right? If you're the ilk where you're looking at wrong drawing tool, where you're looking at some sort of a projection off of a pullback, right? So maybe this would be about a 38.2 retracement. So if you look at the 38.2 retracement level, we may come back into this region here. This would be about the 38.2 retracement. And then a chance to pop back up here at this 61.8 level is where you may see a bit of resistance up here. Now, why do I look at those Fibonacci extensions and Fibonacci's? Well, because enough algo traders do that it becomes valid, right? And that's really my point behind looking at it. I'm not saying that it has nothing to do with the actual demand and supply, but it does have of the levels that were formed on the left. But it does have to do with the orders that are placed that may affect price on the right. And so I'm going to wrap my lines around this area up here, this area of potential selling opportunity. For now, I'm going to change that, however, to a dashed line trade because it is something that I want to see, price come into the level. In the Nasdaq, we actually broke through the level that would be the equivalent of that off of yesterday's strength and continued to rally higher. However, we have not come back to what would have been a breakout trade earlier, this area up here, which ultimately to me is that big overhead resistance. Something I don't really cover very much in the daily market commentary. We talk about it in the live trading rooms, but I want to bring it up. for those of you that are subscribers to the live trading rooms, kind of as an update for you, and for those of you that are not, you can at least see one of the things that we were looking at was the Russell, and this was the area that we were looking for the reversal in the Russell. This is the area that had price coming in, and this is really where our turning point was. It was off of this little sideways price action before a nice big move down. Now, this is really a very wide area found on the 4-hour chart. And if you look at the 4-hour chart, it's the origin of this move down, and then this little tiny area, 1601 by 1611, was what was found on the 1 hour. So it's kind of a level inside of another level. And we've dropped about 11 points from that area, but it's a fairly wide area. So if you did catch this on the hourly chart, you've got about a 1-to-1 reward to risk. Now it's moved 1-to-1 from entry. You don't have a 2-to-1 yet. Obviously, a 2-to-1 would come into play somewhere right in here, but you should be considering protecting some of that profit if you do indeed have it in play. All right, crude oil. So crude oil is still basing between the same levels. Talked about it yesterday that we could have a breakdown below the 70.55. I'm going to leave that level in play. And we also have the reversal level up above us. So that has not come to fruition yet. Nothing really to add. Gold, same thing. Level up above, breakout level down below. Neither one has come to fruition. So I'm just going to leave them be. There's nothing to add, nothing to take away in those. In the bonds, currency markets, you're going to see a lot of similar price actions. Nothing happening here, nothing happening here, nothing happening here, and nothing happening here. None of them have come to any of our areas. I'll maximize them a little bit. Now, what does that mean? Does that mean that I go and force the trade? Absolutely not. It means that I wait for price to come into my area. So, because, now, this is setting up for a potentially big breakout. Okay, think of it like a spring that's really being tightened, or remember those toy airplanes where there would be a rubber band attached to the propeller, and that propeller is just we're just winding it and winding it and winding it and winding it. We can sometimes get a big move off of that. However, we don't have it yet. In the Aussie, we converted this to a confirmation style entry. We've not got that yet. We may get that one shortly, but I will tell you, I'm not feeling super great about it. We may get a little bit of a move out of it, but I would be very quick on that profit taking on that one. The Euro confirmation style entry as well, down into this area. Now, mind you, these are all hourly charts. If you're trading as a short-term day trader, are there going to be more opportunities? Sure. On a 5-minute chart, you're like, oh, great, I made a huge move. And that's okay if that's your style, if you want to trade that short time frame. I do not. I have found that the bigger the time frames that I trade, the less trades I take, but the higher my winning percentage is going to be. Moving over to the Great British Pound, the Japanese Yen. In the Great British Pound and the Japanese Yen, we do have two levels that we're coming close to, have not quite gotten there yet, so we'll keep an eye on both of these. So as far as today goes, I would anticipate that we're going to get some moves in the bonds and the currency markets that we haven't gotten for a few days. I have not really, I don't want to sound like a perma bear, because that's certainly not what I am. I'm a much bigger bull than I am a bear. Overall, especially with the market doing what it's done for the past 9 years, right? There's no reason to not be. However, I'm not sold in yet on the rally that we got starting Friday. The rally that we got starting Friday, if you go to a 4-hour chart, we still haven't put in a lower swing high or higher swing high. We still haven't put in a higher swing low. We on a 4-hour chart, we've not proven anything. On the hourly chart, sure we did. Right? But that's if you're a very short-term day trader. And the hourly chart is your big picture. On the 4-hour, I've not proven anything yet. And so I'm not really ready yet to change my mind. And I go back to what happened in February. Look at February's price movement, where we had the huge move down, and then we had this really strong rally. And then it came back down and retested those lows. I think there's a chance that we're going to retest those lows again. And I could be wrong, but I I feel like it's a better opportunity to retest those lows. I think there's another shakeout coming, and so while I'm not against getting long when the market tells me to do so, I am still going to be cautiously bearish and enter the trades when the market tells me to get in. I'm not going to force a trade. That's super duper super important for me as well. So one more piece. When looking at these markets, yesterday the Russell was our strongest market, and that's the first time that's happened in a number of months. So that actually is a more slightly bullish sentiment, as it went up on a percentage basis, really stronger than anything else. But now that's really the one that has hit the overhead supply and began that rollover point. So once again, next week, if you guys want to join the live trading room, go to tradersarmy.com, sign up for the free subscription. But until tomorrow, I will see you all soon. Later.